Yes, students. Now we will discuss the questions from ICI material on chapter 30. We have good number of questions on this chapter, guys. We have around 15 practical problems, one case scenario, and 10 multiple choice questions. Everything at a stretch we will do. Good, interesting questions are there. Let us see. First, multiple choice question, guys. Under standard cost system, the cost of the product determined at the beginning of the production is known as what, guys? Direct cost, predetermined cost, historical cost, or actual cost? Predetermined cost, which is also called standard cost. The deviation between actual and standard cost is known as multiple analysis, variable cost analysis. Alle tempt agutte. Please be careful. It is variable cost analysis, not variance. Then variance analysis. Last one is linear trend analysis. The answer is C. Variance analysis. The standard which is attainable under favorable condition is theoretical standard, expected standard, normal standard, basic standard. Guys, it is theoretical standard. Now see, in overhead chapter, if you guys remember, we had discussed about some capacity, installed capacity or theoretical capacity. This is the maximum we can operate. Correct? If everything is in my favor, no problem, no ideal time, nothing, then I can operate at this much. Clear? So installed capacity is also called as what? Theoretical. So here it is standard. Instead of capacity, we are reading it as standard. So it is theoretical standard. Then the standard most suitable from cost control point of view is normal standard, theoretical standard, expected standard, basic standard. Here the answer is expected standard, guys. Sir, why is it? I am also explaining. Guys, while setting the expected standard, we would have already considered the ideal time and all. Sir, I know, especially normal. If I already know that this will happen, then by setting the standard, I would have already considered, yes, sir. See, theoretical is not practically possible. They are just asked in the previous question, if everything is in our favor, what is the maximum we can do? That is theoretical. But is it possible? No, sir. So there is chances of normal ideal time, abnormal ideal time and all are loss. So we have to consider them by setting the standards. So that is called what? Expected standard after considering the loss. Then overhead cost variance is the difference between overhead recovered on actual output and actual overhead incurred. Is it correct? Yes, sir. Let us read the other option also. The difference between the budgeted overhead cost and actual overhead cost obtained by multiplying standard overhead absorption rate with difference between standard hours for actual output and actual hours worked. No, none of the above. The answer is first one, guys. When I started explaining the overhead variances itself, I told you whatever we are calculating here is nothing but under absorption or over absorption. Clear? But we name it as variance in this chapter, but it is nothing but under absorption or over absorption. So how do we derive under absorption or over absorption? Overhead absorbed minus actual overhead incurred. Actual overhead incurred. So that is what the first one is. Overhead recovered is nothing but observed, okay? Which of the following variance arises when more than one material is used in manufacture of a product? Material price variance, material usage variance, material yield variance, and material mix variance. In my opinion, yield as well as mix both should be there. But which is the most appropriate if you ask me? Mix variance. Mix variance. Sir, yield, can I calculate for one also? Yes, but it will give almost same like usage variance. Clear? For example, for yield, the alternate formula is there now. Total standard input minus total actual input into average standard price. Even if only one material is there, can I use it? It will not make sense, but you can still use it. You will get the answer very similar to what? Usage variance. Because usage variance, what is the formula? Standard hours. Okay, this is material. Huh? Standard quantity for actual output minus actual quantity into standard price. So when there is only one kind of raw material, even yield also will give same loss. Yeah. So actually it is yield as well as mix here because both we will calculate only when there is more than one category of raw material used in the production process. But out of the given, sir, if you want me to choose any one, which is the most appropriate, mix, guys, because we have to consider the standard mix and all. Standard mix, that is the total actual quantity. We will divide it in what ratio? Standard quantity ratio. For this, we should have more than one category of raw material. Seventh one. If standard asks for 100 units of output are 400 at 2 rupees per hour and actual hours taken are 380 at 2.25 per hour, Then labor rate variance. Guys, what is the formula for labor rate variance? Standard rate minus actual rate into actual hours spent. Here they have given only 1 hour. Let us take it. Standard rate 2. Actual rate 2.25 into actual hours work 380. How much you are getting? How much? 95 articles. 95 articles. Yeah. Sometimes, guys, please be careful when they are asking the questions like this. They will keep 95 adverse also, 95 favorable also. Please be careful with the signs also. Yes. Next, eighth one. Controllable variances are best disposed of by transferring it to. Guys, what is controllable variance? What is controllable variance? Which is something which can be controlled. Correct? Within the organization's control. Now, if still it is happening due to by mistake, even though I can control it, still it is happening. Sir, controllable variance is there. Assume it is adverse. What should I do? I have to transfer it to costing P&L account. Very similar to abnormal reasons. Correct? Abnormal loss or abnormal idle time is what, guys? Which I would have avoided, but I couldn't because of my negligence or whatever it is. Now here also controllable variance means I would have controlled it. I would have avoided it, but still I have not done it. That means any controllable variance, whatever, especially adverse you get, you will transfer it to what? Costing P&L account. If you want, you can just mention like similar to abnormal. Similar to abnormal. You have to connect like this and study. Conceptually, you have to strong. You have to be strong, guys. Yes, let us see. Cost of goods sold, cost of goods sold and inventories, inventories of work in progress and finished goods, costing profit and loss account. So the answer is D, guys. Idle time variance is obtained by multiplying what and what? What and what? Idle hours into standard rate. Yes, let us see. The difference between the standard and actual hours by the actual rate of labor per hour? No. The difference between actual hours paid and actual hours work, what do we get it? Idle time into standard. Is this the correct formula? Yes, sir. Let us read the C. The difference between standard and actual hours by the standard rate of labor per hour. No. So the answer is B, guys. Basic standards are. Basic standards means you know, no? Sir, my forefathers have put it. So we are not changing it, sir. Same thing we have kept it. Those standards which require high degree of efficiency and performance? No. Average standards and are useful in long-term planning? No. Standards which can be attained and are achieved? No. Assuming a remain unchanged for a long time. Basics means, sir, it has been kept same year to year. Same thing we are adopting. Are we making any changes? No. And is it good, sir, for the organization to follow? No, guys. In the next chapter also we'll be learning. Next last chapter, that is chapter 15, something called as the basic budget and all. Yeah, very similar to that. Basic budget also means, sir, year to year we are following the same thing. No increase or no decrease. Yeah, just so. Done with MCQ class. Now going forward to practical problems. For making 10 kg of Semco, the standard material requirement is, guys, the standard data is given for how much? 10 kg. So if I ask you, standard quantity should always be for what? Actual output. Good. So A, 8 kg at rupees 6 per kg, 4 kg at rupees 4 per kg. During April, 1000 kg of Simco were produced. The actual consumption of material is as under. Guys, let's do simple question. Listen here. All this we have to convert for how much? 1000. How is it, sir? Simple. If 8 is for 10, how much for 1000? 8 by 10 into 1000. 4 by 10 into 1000. That's all. Please don't straight away do 8 into 1000 and 4 into 1000. You will be wrong. 8 and 4 is not per unit. It is for 10 kg. Please be careful because some of the question you would have solved telling for 1 unit. With the same notion, you will go and multiply with the output. Please don't do that. Read the question carefully, guys. Okay, actual. A 750 kg at rupees 7 and B 500 kg at 5. Material cost variance, price variance, usage variance, guys. Simple, very simple question. Okay, first standard, right? This is your basic work. If you are done with this, I don't think anything else will be tough for you. Just applying the formula and converting the values. Yes. First calculate this. How is it, sir? 8 kg is for 10 units of output. How much per 1000? You will get 800 for A and 400 for B, guys. Multiply with the standard rate, you will get standard cost. Same way actual is already given, just copy paste from the question. If you multiply quantity with rate, you will get actual cost. So first, material cost variance. Standard material cost minus actual material cost. They have done it overall. So can I do it for A and B separately? Yes, you can do it. Then price variance. What is the formula for price variance? Standard price minus actual price into actual quantity. Here, sir, purchased or consumed, don't worry, if both is one and the same. Okay, even if purchase and consumed is separately given, what do you take, guys? Consumed. Yes. Okay. So for A, 6 minus 7 into 750. You will get 750 adverse. For B, 4 minus 5 into 500. You will get 500 adverse. So the total is 1250 adverse. Guys, present like this. Don't leave it individually like that only. Always do the total. It will also help you to reconcile, cross check. Usage variance. What is the formula? Standard quantity for actual output minus actual quantity into standard price. Yes, sir. Let us do it. For A, 800 minus 750 into 6. For B, 400 minus 500 into 4. You will get 300 favorable and 400 adverse. Net figure is 100 adverse. Guys, please be careful when one is favorable, one is adverse. By mistake, you may add up both. You have to net adjust. That is 300 plus and 400 minus. So, if you net adjust, you will get minus 100. Okay, sir. 100 adverse here and 1250 adverse. So, you will get total 1350 adverse. Matching? Yes, sir. That means we are right. Sir, can we show like this? Check or reconcile? Yes, you can show it. Sometimes mandatorily they will ask, guys. For example, also reconcile the variances. You have to show in that case. Or else this becomes a choice for you. Sir, is it good to show? Yes. If you have another 1 or 2 minutes extra, better show it. Better show it. No, sir, I am running short of time. What will I do? Just cross check in your calculator. Is it matching? And then go forward. Just go forward. Okay. One done. Coming to the second one. Come to the second one. The standard needs to produce 1 unit of product. Now, guys, standard data is given for how much? 1 unit of a product. It is as follows. Material X 60 units at 15 rupees per unit. Material Y 80 units at rupees 20 per unit. Material Z 100 units at 25 rupees per unit. Okay, sir. And please be careful. All these are for 1 unit. During the month of April, 10 units were actually produced and consumption was balanced. Guys, listen here. Takkanta, you have to do one thing. What is it? Convert all standard for actual. Actual output. Okay. Actual consumption is like this. Material X 640 units at rupees 17.5 per unit. Material Y 950 units at rupees 18 per unit. Material Z 870 units at rupees 27.5 per unit. Calculate all material variances. Again, very simple question. Very simple question, guys. Yeah. Standard you have to convert for 10 units. Whatever they are given in the first table is for 1 unit, guys. Convert everything into 10. Into 10. If you want, you can show it here also. Whatever they have given into 10. Whatever they have given into 10, guys. Yeah, yes, sir. Multiply that with standard rate. What do you get? Standard cost. Then actual data, whatever they have given, just copy paste. Just copy paste. Sir, is it required to copy paste or can I just straight away do the calculation? Guys, for any questions on standard costing, I would suggest you to prepare this table. I would suggest you to prepare the table so that it will help you in your calculation. Even though this data is actually already given in the question, should I rewrite? Yes, rewrite, no problem. Okay. Material cost variance. Normally they do in total, guys. Whatever I have observed in ICI suggestion answer is only for cost variance, they do total. Whereas for all other, they do individually. Sir, even for material cost variance, can I do individually? Yes, you can do. Anyway, at the end, you will get the total. Anyway, at the end, you will get the total. Oh, sure. What they have done? Standard cost minus actual cost in total. Adverse, you will get 2225. Coming to price variance. Standard price minus actual price into actual quantity. For all three, standard price minus actual price into actual quantity. Into actual quantity. Yes, sir. Next, coming to usage variance. What is the formula? Standard quantity for actual output minus actual quantity into standard rate. So, here quantity, standard quantity minus actual quantity into standard rates for all x, y, z. You need to do. Okay, as the questions are simple, I'm not going in detail about it individually, guys. So you'll get totally 350 adverse for usage and for price 1875 adverse. Add up both. Check, is it matching? 2225 adverse. Matching, sir. We can proceed further. Sir, can we calculate mix and yield for this question? Yes, we can calculate. As there is more than one kind of raw material used in the production, we can calculate mix and yield, guys. Material mix variance. What is the formula? Revised standard quantity minus actual quantity into standard price. So revised standard quantity, how can we calculate? Take the total actual quantity, divide it in standard quantity ratio. So it would be for X how much? 2460 divided by 2400 into 600. For Y how much? 2460 divided by 2400 into 800. For Z it is 2460 divided by 2400 into 1000. Into 1000. Just revised standard quantity once you get, you will get 615, 820 and 1025. Bring it to the main answer. Minus actual quantity into standard price. You will get 900 favorable. 900 favorable. Then coming to yield variance. Material yield variance. What is the formula? Standard quantity minus revised standard quantity into standard price. Individually you are doing. Yes, sir. So everything is already ready. Revised standard quantity is your standard quantity is there in the table into standard rate gas. Into standard rate. So how much you're getting? 1250 adverse. So 900 favorable, 1250 adverse will give you how much? 350 adverse. Cross check. Is it giving 350 adverse? Yes, sir. And sir, material yield variance can be also calculated in an alternate way. What is it? That is overall. Overall. Let me tell that. Total standard quantity. I will show it here. 2400 minus total actual quantity 2460 whole into standard average price or average standard price 50,000 divided by 2400. How much you will get? Or else let me show like that only. 50,000 divided by 2400. Okay, just straight away multiply. Better. Whatever difference you get, straight away multiply with into 50,000 by 2400. 1000, 1250. 1250 articles. Yes, 1250 articles. Are we getting the same? Yes. Please be careful. Whatever formula I just now explained, what is that formula? I will repeat again. Total standard input minus total actual input into average standard price. How do you get average standard price? Total standard cost divided by total standard quantities. And you can calculate this only over, not individual. You cannot calculate individually for X, Y, and Z. Okay. Let us move to the next question. Guys, question number 3, I have done it in the class itself. It is a part of my question bank. We already discussed this. Correct? Fourth one, question number 4, guys. 1 kilogram of product K requires 2 chemicals A and B. The following were the details of product K for the month of June 2023. Standard mix for chemical A and B is 50-50%. They are not told what is the quantity, but they are told what is the mix. 50%, 50%. For example, if you are using totally 10 kgs, how much we will use of A and B? 5 kg, 5 kg. Standard price kilogram of chemical A is 12 rupees and chemical B is 15 rupees. Actual input of chemical B is 70 kilograms. Actual price per kilogram of chemical A is 15. Standard normal loss is 10% of total input. Total input. Please be careful. Total material cost variance is 650 adverse. Total material yield variance is 135 adverse. Guys, this is something special for me. D and E, what they have given is something special for me because this is something answer. They have already given it in the question. That means it will help me somewhere in my answer. You are required to calculate total material mix variance, usage variance, price variance, and actual loss of actual input of chemical A, actual price per kg of chemical B, guys. Okay, this is what they are asking. Let us move to answer number 4. Yeah, interesting. Working notes are interesting, especially the first one. Please pay attention. Guys, how much quantity of standard materials are they given? No. So what we are doing is we are assuming 100. Total as 100. Assumption, you can see. Calculation of standard mix of input, assuming standard input as 100 kg. So if I assume standard total input as 100, how much will be chemical A and chemical B? 50-50%, which comes to 50 kg, 50 kg. Okay, sir. And there is a standard normal loss of 10%, which comes to output how much? Hello? Output how much? 90. Means if I give an input of 100, it will give me an output of 90. They are given in the question standard normal loss is 10%. Guys. Okay, sir. Price they are given, multiply, you will get the standard cost. This is nothing but standard cost. Guys. Okay. Next. Let the actual input of chemical A be X and actual price of chemical B be Y. They have asked this. Actual input of chemical A is X, let us assume it. And actual price of chemical B is Y. Given. Material yield variance. I told you. Whatever they have given in the question, that will be an int for you. Normally, that is what we have to compute. But they have already given it in the question. Material yield variance. What is the formula, guys? Total standard input minus total actual input into standard cost per unit of input, which is nothing but average standard price. Average standard price. The second formula they have used here. Okay, sir. Do we know what is the total standard input? Yes, 100. Minus total actual input, we don't know. We don't know, guys. So, for actual input of chemical A is how much? X. Whereas for B, 70. Is B given, sir? Just a minute, I will show. You can see for B they are given 70. 70. For A we are assuming it to be X, guys. Hope you are getting now. We are using the second formula. Total standard input minus total actual input into average standard price. They have told something here, standard cost per unit of input, which is nothing but average standard price. Okay. Now total standard input is how much, guys? 100. Okay. Total actual input we don't know. That is nothing but X plus Y. Sorry, X plus Y. A plus B. So B they have given 70. For A we are assuming it to be X. Clear? It should be actually interchange. Because normally we go with A plus B, not B plus A, but that's fine. Okay, it is X plus 70. For A we are assuming it to be X. For B they have given it to be 70 into average standard price. How is it, sir? 1350 divided by 100. 1350 divided by 100, guys. Total standard cost divided by 100. Total standard quantity. Are you getting 13.5? Hello? Yes. Yes, sir. 13.5. And they have given this as what? 135 adverse. Sir, did we find? No, it was already given in the question. Already given in the question. Guys, you may ask me, sir, why did you use this formula? Yield, whichever formula you use, total we will get same. We will get same. And what they have given is for A na, B na, total. Total. Correct, sir. Material yield variance they gave. How did you understand it is for total? If it was for A or B, they would have mentioned, na? Material yield variance of A, material yield variance of B, they would have mentioned. If nothing is mentioned, it's understood that it is for total gas. Okay, sir. So it is given as 135 adverse in the question it is mentioned. Therefore, calculate guys. X is equal to 40 kg. X is equal to 40 kg. Yes, sir. Hope you guys know how to solve now. Hello, I will just tell you. Okay. But you can do this way. You can straight away take 13.5 to the other side. It becomes a denominator. 135 divided by 13.5. You will get minus 10 guys. Minus 10. Then on this side, 100 minus 70 minus x is equal to minus 10. Minus 10. So bring minus 10 to this side and minus x to the other side, you take it. So it would be 100 minus 70 plus 10 is equal to x. So x is equal to 40 kg. 40 kg. X is equal to 40 kg guys. Oh. Also, material cost variance is given. What is the formula for material cost variance guys? That is given overall. Please be careful. Again, overall, not for A or B. What is the formula? Standard material cost minus actual material cost. So if I derive standard material cost, how will I get it guys? Standard quantity into standard price. Actual material cost. Actual quantity into actual price. Okay, sir. Now 1350 already given standard labor standard material cost. Standard material cost is 1350 guys. 1350. Okay, sir. Of what? A or B or both put together? Both put together. Both put together. Please be careful. So that means I have calculated for A plus B both, sir. Now even actual quantity into actual price should be for both? Yes, sir. So A here, B here. We have to add both. What is the actual quantity of A? 40. Into actual price? 15. Then what is the actual quantity of B? 70. Into actual price of B we don't. Actual price of B we don't know. We are keeping it as Y. We are keeping it as Y. Hope you are understanding guys. This entire part is actual cost. This entire part is actual cost. This is for A, this is for B. We have to add up both. Why so? Because what they have given 650 adverse is total, not individual. Okay, so 650 adverse. That is equal to 1350. 40 into 15, 600. Then 70y minus 70y because this is minus plus. Minus plus will be minus 70y is equal to 650 adverse, which is negative. Take it to the other side. 650 minus 650 will go to the other side and minus 70y will come to the opposite side. So it would be 1350 minus 600 plus 650 is equal to 70y. Is equal to 70y. How much do you get there? 70y is equal to how much guys? 1350 minus 600 plus 650. 1000. So y is equal to 1400 divided by 70, which is equal to 20. What is y here? Actual price of material B. Actual price of material B, guys. Or if you want, you can mention in the bracket. Actual price of material B. Okay. Now we are almost ready with the data. Let us go and calculate the variances. Material mix variance, guys. First, we need revised standard quantity. Revised standard quantity. Sir, how do we divide it? Actual quantity is how much, guys? Total. 40 plus 70. Correct? 40 plus 70. 110. Divide it in standard mix ratio. What is standard mix? 50-50. 50-50. Yes, sir. Sir, should I take these numbers here? This is 50-50 kg. But percentage also we already know, na? 50%, 50%. Divide it in. Okay, sir. We will get 55, 55. Bring it minus actual quantity, which you already know. 40 minus 40 and 70 into standard prices. 12 and 15. 12 and 15. Yes, sir. So you will get 45 adverse. 45 adverse. Then usage variance. Individually we are doing. That means what is the formula? Standard quantity minus actual quantity into standard price. Standard quantity we have done in working note 1 minus actual quantity 40 and 70 into standard price. You will get 180 adverse. 180 adverse. Okay, sir. Material price variance. Material price variance. Standard price minus actual price into actual quantity. Yes, sir. 12 minus 15 into 40 for A and 15 minus 20 into 70 for B. All these values we already have it. Just apply it and calculate. You are getting 470 adverse. Guys, check it. 180 adverse, 470 adverse. 650 adverse. This is already given in the question. Which is already given in the question. Matching, sir. Then actual loss of actual input they are given. Guys, what is the total actual input? 40 plus 70. 40 plus 70, 110. What is my actual output? 90. Actual loss is 20. Actual loss is 20. Consider this only as actual output. Because standard should always be for what? Actual output. So what is your actual output? 90. But input is 110. That means actual loss is how much? 20. Sir, you took here. Only 10 no, sir. That is standard loss. That is standard loss. Please be careful. Even we have solved some questions where standard loss will be different, actual loss would be different. Next, actual input of chemical A, which we already calculated as 40 kg. Then actual price per kg of chemical B, which is 20. We already calculated. We have already calculated. Yes, guys. Done with the fourth answer. Let us move to the fifth question. Question number 5. The following standards have been set to manufacture a product. Manufacture a product. That means I can assume it to be per unit. Per unit mass. Direct material. 2 units of A at 4 rupees per unit. Then 3 units of B at rupees 3 per unit. 15 units of C at 1 rupees per unit. Okay, sir. Direct labor 3 hours at rupees 8 per hour. Total standard prime cost 56. Assuming there is no other direct expenses. For standard costing, assume other direct expenses is always zero. Clear, we always calculate only for direct material and direct labor as variances. The company manufactured and sold 6,000 units of product during the year. Direct material costs were as follows. So actual data. Guys, what is the actual output? 6,000. So we should convert our standard data for how much? 6,000. Straight away multiply. Nothing, no drama. 2, 3, 15 into 6,000. 3 hours into 6,000. You will get standard quantity and standard hours. That's all. Half of the things are ready. Direct material costs were as follows. They have given actual quantities first. 12,500 units of A at rupees 4.4 per unit. 18,000 units of B at rupees 2.8 per unit. 88,500 units of C at rupees 1.2 per unit. The company worked 17,500 direct labor hours during the year. For 2,500 of these hours, the company paid 12 rupees per hour, while the remaining the wages were paid at standard rate. Standard rate for what? Whatever is the standard rate. Okay. Okay. What is the standard rate where we will see 8 rupees? Clear? Yes. Fine. Actual labor hours worked is 17,500 hours. There is no idle time, nothing until unless they mention. Calculate material price variance and usage variance, labor rate and efficiency variance. Please be careful, they have not asked everything. Whatever they have asked, only do that much. If they ask you, calculate all material variances, then you will do everything. Yes, sir. Let us get into the solution. Come to the solution. First, calculate the standard quantity, guys. Standard quantity is not given in the question directly, but show it. How much per unit? 4 or 2. 2 into 6,000. 3. 3 into 6,000. 15 into 6,000. Okay, standard quantity we have done, and straight away here itself they have multiplied with standard prices. Better you show it as a separate column into standard price, then amount. Okay, sir. Guys, whatever 192 we have got is what? Hello, standard material cost. Then here 2,11,600 is what? Actual material cost. They have done actual quantity into actual price already. Here itself in one column only they have done it. Yes, sir. Then actual quantity into SP, that is standard price also they have done, but I don't suggest this, guys. I don't suggest it. This is for answers calculation they have done it, but we will do it directly by applying the formula. Don't worry. Material price variance. What is the formula, guys? Standard price minus actual price into actual quantity. Actual quantity. Now they have converted the formula here. You can see standard price into actual quantity. Okay, now minus actual quantity into actual price. Yeah, for that they have done like that. So should we do like that? Is no. I suggest straight away do. For example, for A, how much it is? Standard price 4 minus 4.4. Just 4 minus 4.4 into actual quantity 12,500. Then for B, guys, 3 minus 2.8 into actual quantity 18,000. For C, it is 1 minus 1.20 into 88,500. 88,500. You will get same answer at the end. You will get the same answer. You can cross if you add all three. Yeah, what they have done is they have converted. Guys, formula is what? Standard price minus actual price into actual quantity. Now, what they have done is standard price into actual quantity minus actual price into actual quantity, which they have already calculated here. They will take it straight away. They will straight away take it. Correct. Actual quantity into standard price they have done here, which I told is not required. Minus actual quantity into actual price is already here. Straight away take it. Straight away take it. Yes. I don't suggest this way of calculation. No, sir, I am happy with this. Can I do? Yes, you can do. End result will remain same only. Then coming to usage. Guys, what is the formula for usage? Standard quantity for actual output minus actual quantity into standard price. Yes, sir. So what they have done is again similar to what they have done in the top. Standard quantity into standard price minus standard price into actual quantity, guys. Now standard quantity into standard quantity. It's already here. Yes, sir. Then minus standard price into actual quantity. Actual quantity into standard price. They have done straight away. They have taken this values. Sir, can I do it individually, sir? Like how we did in the class? Yes, that is what I would suggest. Yes. How is it? Let me show somewhere. Yes. Here itself I will show. Yeah. What is the standard quantity? 12,000 minus actual quantity 12,500 into standard price 4. For B, standard quantity 18,000 minus actual quantity 18,000. Here itself you will get 0, you can imagine. 3. Then for C, it is 90,000 minus 88,500 into 1. Clear. Total you will get the same, guys. Total you will get the same. You need not worry. This is our usual calculation. Correct? Now don't deviate from it. Clear? Because they have done something, some calculation and all here. The end result will remain same only, guys. Don't get confused. Sorry, you are teaching in a different way. Nothing. I have taught you in the same way. Okay, but here actually as per ICA in one question they will follow one type of answers. And students, if they are not able to understand why they have derived like this or how they have derived, then it becomes very difficult. That is why I am helping you out. So if you want, you can write down whatever I have shown you. Clear? Usage and price, like however usually we do. For material only that much they have asked. Coming to labor. Coming to labor. What is the standard ask for actual output? 6,000 into 3. How much you will get? 18,000 into 8 standard cost you will get. Okay. Actual tax. There are different payments. There are different payments. 2,500 hours is paid at how much? 12 rupees. Remaining is 15,000. How did you get 15? 17,500 is the total actual hours. Hello? Minus 2,500. So you will get 15,000 into 8. They told you are paying at standard rate. That means standard rate is how much? 8. Okay. They have done actual hours into standard rate. I don't suggest this. Not required. Straight away you can apply the formula and calculate. Labor rate variance. What is the formula, guys? Standard rate minus actual rate into actual hour spent. Okay. Here spent and worked is one and the same. Now only one category of workers is there. Straight away you do there only. So standard rate is hello 8 minus actual rate 12 into for how many hours? 2,500. Plus, you can do one more part, but that is not required what I suggest. Why? Because standard rate and actual rate is same. You will get 0. But still, if you want, you can show 8 minus 8 into 15,000 hours. How much do you get? Huh? 4 into 2,500, 10,000 at the bus. Bidi bidi. It's okay. Go straight. Huh? 10,000 at the bus. Did you guys get it? Yes. So this part, is it mandated to show? You can skip it also. Because we know for 15,000 hours, standard rate and actual rate is same. So 8 minus 8 is 0. 10,000 at the bus. Then labor efficiency variance comes. Standard hours minus actual hours into standard rate. So what is the total standard hours? 18,000 minus 17,500 into 8. Okay, here also they have done differently. 18,000 minus how much is it? 17,500 into 8. This is the simplest way, guys. 4,000 favorable. Ashte. 4,000 favorable. Did you guys get it? Yes. So, in my view, guys, this part is not suggested. Last column is not suggested, guys. Work. Let us move to the next question. Question number 6. The following information is available from the cost records of Novel and Co. for the month of March 2021. Material purchased 20,000 units at rupees 88,000. Material consumed 19,000 units. Purchased to consumed is different. Now for calculation, what do you take? Consumed. Clear? Consumed. Just to reconcile. Actual wages paid for 4,950 hours, 24,750. Units produced is 1,800 units. Standard rates and pieces are, pieces is nothing but units. Direct material 4 rupees per unit. Standard output is 10 number for 1 unit. 10 number for 1 unit means what? To produce each and every unit of output, you have to take 10 units of input. 10 units of input. What is your actual units produced? 1,800. Guys, come on. What should be the standard quantity? What should be the standard quantity? 18,000. Correct? 18,000. Standard quantity. Let me write like this. Yes, Q. This direct labor rate 4. Standard requirement is 2.5 hours per unit. So that means standard hours. Hello, standard hours 2.5 into 1,800. 4,500. Okay, rest all is easy. You are required to calculate relevant material and labor variances for the month. Relevant they have told. That means all other mixed yield will not come. Okay, whatever is possible. Yes, mix and yield will not come because there are no number of category guys. Okay, come to the solution. Yes, material cost variance first. Standard material cost minus actual material cost guys. So what's the standard quantity? I have already shown you. 18,000 into standard price 4 minus actual is 19,000 into 4.4. Guys, 19,000 here. What is taken? Consumed or purchased? Consumed. Please be careful. You can highlight that point. So you will get 11,600 at the bus. Standard quantity calculation they have shown you. Anyway, I have explained it. Material price variance. Standard price minus actual price into actual quantity, guys. So 4 minus 4.4 into 19,000. Again, what we have taken? Consumed. Correct? Yes. Actually, for purchase formula, for actual price formula, what should we consider? Purchase. But I have told you in order to reconcile, what do you take? Hope you guys remember the clarification, what I had given in my concept book. Yes. Yes, sir. So which comes to 7,600 at the bus. Coming to usage. In usage, what should we take, guys? Actual quantity consumed straight away. So standard quantity minus actual quantity consumed into standard price, which will give you 4,000 at the bus. Then coming to labor cost variance. What's the formula? Standard labor cost minus actual labor cost. Standard labor cost is equal to standard hours for actual output into standard rate. minus actual cost is already given in the question, copy paste. Actual labor cost is already given, guys. So 4,500 how we got, we already know now. Standard hours per unit is given, multiply that with actual output. I already showed it. Yes, sir. Here also they have shown, you can see. So you'll get 6,750 afterwards. Labor rate variance, standard rate minus actual rate into actual hours. Actual hours spent or worked done. Here anyway both are same. Sir, when spent and worked is not separately given, can I simply write actual hours? Yes. You need not mention the word spent and worked. If it is separately given in the presence of idle time, then clearly mention where you use spent, where you use worked. If not, you can simply use the word actual hours. Yes. Standard rate minus actual rate into actual hours. You will get 4,950 afterwards, guys. Then coming to efficiency. Efficiency variance, we will calculate based on hours. So standard hours for actual output minus actual hours into standard rate. You will get 1,800 afterwards. Just cross check. 1,800 adverse plus 4,950 adverse. Are you getting 6,750 adverse? Hello, Rohit, did you get? Next, even for material, 4,000 adverse plus 7,600 adverse, you will get 11,600 adverse. Yes, sir. Matching. Sixth one done. Now, I think we will move towards overheads. Sir, enough of material and labor, sir. Let us move towards overhead. Yes. Question number 7. XYZ company has established the following standards for factory overheads. Variable overhead per unit, 10 rupees. Guys, established means actual standard. Standard. Fixed overhead per month, 1 lakh. Capacity of the plant, 20,000 units per month. Can we calculate per unit now? Fixed 1 lakh divided by 20,000. How much you will get? 5 rupees. The actual data for the month are as follows. Actual overhead incurred 3 lakh. Actual output units 15,000 units. Guys, come on. Actual overhead incurred means only variable, only fixed, both. Both. Please be careful. If it is variable fixed, they have to give it now. Yes. So it is total, guys. Actual output is 15,000 units. Calculate overhead variances by with respect to production volume variance, overhead expenditure variance. Expense variance is nothing but expenditure variance. Whatever they are asking, both is with respect to what? Hello, fixed overhead variances. Fixed overhead variances, guys. 7th question. Let us move to the 7th answer. Yes. Fixed overhead volume variance. What is the formula, guys? Only for fixed they have asked. Okay, they didn't mention obviously, but volume will come where? Yeah, under variable it will come. You should know it. Fixed overhead volume variance is equal to what? Observed minus budgeted. Observed minus budgeted. Now, what is the rate per unit, guys? 5 rupees. We got now fixed standard fixed overhead rate per unit. How much? 5 rupees. I showed the calculation. Yes, sir. What is the actual output? 15,000. So how much you will observe? Guys, predetermined overhead rate is how much? 5 per unit. For each and every unit you produce, how much you will absorb? 5 rupees. So totally you have observed how much? 5 into actual output, 15,000. Minus 5 into 20,000. That is, they have already given, na? Budgeted, you need not show 5 into 20,000. Straight away it will take 1 lakh. I guess 1 lakh is directly given. You can take it. Yes. This is budgeted. Please be careful. This is observed. Observed will always be for actual output. Okay. So how much you are getting? 25,000 at the bus, guys. Then expenditure variance. Expense is nothing but expenditure variance, guys. Budgeted minus actual. Actual is already given, but total is given. Please be careful. So budgeted, anyway, copy paste. Yes, to 1 lakh. 1 lakh, copy paste. Actually, you need not even show 5,000, 5 into 20,000. Amount 1 lakh is already given. Copy paste it. Okay, sir. Coming to actual overhead, guys. Total minus variable. I told you what they have given in the question is total, not only variable or not only fixed. Okay. Can I remove variable now? Yes. 10 into 15,000. Sir, how did you get it, sir? Ah, actual output is given. Just a minute, I'll come to it. Actual output is given 15,000. Just then variable overhead rate per unit is how much? 10. So for each and every unit you will observe 10 rupees into 15,000. So we are considering actual variable overhead as how much? 15,000 into 10. Yes. Yes. Silence. So from total overheads, we are reducing what? Variable portion, guys, which is 10 into 15,000. We will get how much? 1 lakh 50. So 1 lakh minus 1 lakh 50, 50,000. Only this much they have asked. Only this much they have asked. Stop it. Okay. Seventh one then. Let us move to the next question, guys. Question number 8. Following information is available from the records of a factory. Fixed overhead for the month of June, budgeted 10,000, actual 12,000. Production in June, units 2,000, budgeted output. Asma, budgeted output how much? 2,000. Actual output 2,100. Standard time per unit 10 hours. Guys, come on. Be with me now. Listen here. What is budgeted hours? Hey, budgeted hours 10 into 2,000. 10 ante. Per unit I didn't ask. Budgeted hours. Budgeted hours should always be for what? Gaganashri, budgeted output. So 10 into 2000. What is the standard hours for actual output? 10 into 2100. ಸುಮ್ಮನೆ ಗೊತ್ತಿರೋದಲ್ಲಿ 2000 into 10, 20,000. Then standard hours 10 into 2100, 21,000. Correct? Actual hours worked in June is 21,000. Okay. Actual hours is anyway given. Next, guys, whenever the question is like this, tuck, some basic calculations you have to do. What is it? Standard fixed overhead rate per unit per hour. Standard hours, budgeted hours, we already done. Yes, sir. Keep these things ready, then pitch into the variance calculation. Clear? Yes. What are the cost? Fixed overhead cost variance, expenditure variance, volume variance. No subcategory they have asked. Under volume, they have not asked anything, guys. Any doubt, Faizan? Huh? Okay. Actual fixed overhead incurred 12,000. Budget of fixed overhead for the period 10,000. Standard fixed overhead for the production. This and all is not required. Okay, they have done 2001. 10,000 is for 2,000. How much for 2,100? Guys, simple. It is nothing but, sir, 10,000 is budgeted overhead for budgeted output. How much for actual output? How much for actual output? Okay, sir. Fixed overhead variance, guys. Fixed overhead variance. That is overall. Standard fixed overhead minus actual overhead. This is standard and all fancy terms we don't want. We want observed. Observed fixed overhead minus actual fixed overhead or recovered. Correct? Recovered overhead minus actual. Come on, what is observed or recovered overhead? Standard hours for actual output into standard rate per hour. Guys, they have done already 10,500. But let us do it in our regular calculation. What was the standard hours we computed? 20, 21,000. Okay. What is the rate per hour, guys? Budgeted hours is 20,000 now. Yes. Budgeted overhead is 10,000. So, standard fixed overhead rate per unit is how much? 10,000 divided by 20,000 hours. 0.5. So 0.5. What do we call it as? Fixed overhead observed. 10,500. You'll get 10,500 minus actual 12,000 is already given. Is that clear? Yes. Sir, or can we calculate from units point of view? Yes. Standard fixed overhead rate per unit you calculate. How is it, sir? How much is the budgeted overhead? 10,000. divided by budgeted output. How much is budgeted output? 2000. So 10,000 divided by 2000, guys. 5. What is this? Standard fixed overhead rate per unit into actual output. 5 into 2100. 10,500. That is what actually they have done here. That is what they have done, guys. So observed, you will get 10,500 minus actual. Hope you understood. Clear? Here, standard word what they have used is nothing but for fixed overhead observed. Oh. Next, fixed overhead expenditure variance. Budgeted minus actual. Budgeted is always actual you have to take. That is whatever is for budgeted data. 10,000 minus actual, guys. Okay, sir. Volume variance. Standard, which is nothing but observed. Observed fixed overhead minus observed fixed overhead minus budgeted fixed overhead. So observed we already computed. I have shown you in two ways also. Based on standard hours, based on rate per unit. Yes, sir. We will get 500 favorable, guys. So 500 favorable, 2000 adverse. Net is 1500 adverse. Matching up? Yes. Got it now? Any doubt? You want me to explain anything again? Got it now? Yes. Sure. Question number 9, guys. XYZ Limited has furnished you the following information for the month of August. Budgeted actual is given. Budgeted output 30,000. Actual output 32,500. Budgeted hours 30,000. Actual hours 33,000. Fixed overhead. Budgeted overhead. Okay. Budgeted fixed overhead 45,000. Actual fixed overhead 50,000. Budgeted variable overhead 60,000. Actual variable overhead 68,000. Budgeted days 20. Actual days 26. They have given calendar. As soon as you see this, calendar has to reflect to you. Calculate overhead variance. Which overhead variances are both variable as well as fixed? Guys, one last question we did in our class similar to that. In one question, both variable as well as fixed will be asked. Guys, come on. Some basic calculations we have to keep it ready first. Standard hours. Standard hours first. Let us keep it. Standard hours is how much, guys? Listen here. 30,000. No, 30,000 is not standard hours. It is budgeted hours. 30,000 hours is for 30,000 units. How much for? 32,500. 32,500. Correct, huh? Standard hours is always for actual output. How did we get it, guys? Budgeted hours divided by budgeted output into actual output. Into actual output. If you want, I will show you. 30,000 hours divided by 30,000 units into 32,500. That is actual. That is 32,500. Okay. 32,500. Hope it is visible. Okay. Next. Guys, both fixed and variable per unit and per hour also you can calculate. Correct? Huh? Yes. Sir, per unit. For example, first let us do fixed overhead. Standard fixed overhead rate per unit. 45 divided by 30,000. 1.5 per unit, 5 per hour also same. Okay, fixed. Coming to variable, 60,000 divided by 30,000. 2 per hour same, per unit same. You will get same. Clear? That is standard variable overhead rate per hour. 2 per unit. 2. Same way, fixed cost. Standard fixed overhead rate per unit 1.5. Per hour 1.5. Clear? Simple. How do you get per unit? Budgeted overhead divided by budgeted overhead. How do you get per hour? Budgeted overhead divided by budget hours. Divided by budgeted. But here we have to do separately for variable and fixed cost. Don't add up both. Do it individually. Yeah, yes. When some basics calculations are ready, we are good to go for the variance calculation, guys. Just so. Basic calculation. They have also done here. Standard hours per unit, 1 hour. Standard hours per actual output, 32,500. That is 1 hour into actual output. 1 hour into actual output. Okay, sir. Standard overhead rate per hour. Budgeted overhead divided by budgeted hours. Fixed and variable they have done separately. Fixed and variable separately. Then standard fixed overhead rate per day, that is for calendar variance. Clear? How much? 45,000 budgeted overhead divided by budgeted days. Divided by budgeted days. 1,800. Okay, sir. Recovered overhead, guys. That is observed. Observed. Okay. So here they have done. Recovered overhead. Standard hours for actual output into standard rate. How much? 48,750. Any doubt in this? Standard hours for actual output into standard rate per hour. Standard rate per hour. Fixed is 48,750 and variable is 65,000. Correct? No, guys. See, standard hours we have got here. Then have we got per hour rate, both variable and fixed? Multiply with it. Multiply with it. What do you get? Overhead absorbed or overhead recovered? Clear? Yes, sir. Sir, can we straight away doing variance calculation also this? Yes, that is also fine. Oh, this is fine. Standard overhead they have done. I don't suggest this calculation, guys, but still I will explain it. How is it? Actual hours into standard rate. Actual hours into standard rate. What is actual hours? 33,000. Per hour rate is how much? 1.5 and 2 multiply. But both for fixed and variable. I don't suggest this calculation, but still I have just explained how they have derived. Revised budgeted hours. How much revised budgeted? When calendar is there, we have to calculate capacity na revised capacity na revised capacity for which we want what revised budget hours. How is that, guys? Budgeted hours divided by budgeted days into actual days. So budgeted hours is 30,000 for budgeted days of 25, but actual working days is 26. How much you'll get? 31,200. And even this I don't suggest, but they have done it. Let me just show you how they have derived. Revised budgeted overhead for fixed overhead 31,200 into 1.5. 1.5 is what we have got here. Clear? Yes, sir. But this and this I don't suggest. Okay, because we'll straight away do it in the variance calculation. Okay, one by one we'll get it. First fixed they have done. Fixed overhead cost variance. What is the formula, guys? Observed minus recovered here is nothing but observed. Recovered minus actual. So recovered we already done. Fixed 48,750 minus actual is given in the question itself. 50,000. 1,250 articles. Then expenditure variance. Budgeted minus actual. Budgeted is given in the question itself. Minus actual also is given in the question. Tuck minus 5,000 articles. Volume. Recovered minus budgeted. Recovered we have computed 48,750 minus budgeted is given 45. 3,750 favorable. Efficiency. What is the formula? Guys, they have done it in a different way here, but I will do it in my regular way. What is the formula? Standard hours for actual output minus actual into standard rate. Correct? Just so. Let me do it. Standard hours how much, guys? 30 standard hours 32,500 minus actual hours 33,000 into fixed overhead rate per hour 1.5. How much? Huh? Adverse, how much? 750 adverse. Did you guys get it? Yes. 750 adverse. What is the formula we used, Rohit? Standard hours for actual output minus actual hours work into standard fixed overhead rate per hour. Okay, sir. Then what did they do here, sir? They have got same, but what did they do is they have taken recovered minus observed. Recovered is anyway. What is the recovered formula, guys? Standard hours into standard rate. Correct, now see the formula is standard hours minus actual hours into standard rate, right? So first they have taken this, which is nothing but observed. Then minus actual hours into standard rate. Actual hours into standard rate, they did some calculation here, you see. Standard overhead, I told not required, but they have done it. Understood? Don't follow this is what I suggest because it will unnecessarily confuse you. If not, no sir, I'm comfortable means you follow. That is the thing. But my suggestion is not required because unnecessarily it will confuse you in formulas. Whatever is our regular formula, use that, guys. You will get the same answers. No worries with respect to that. Trust me and go ahead. So this is not required is what I suggest. I repeat guys, for those who want clarity, how they have done is same formula they have used. But standard R into standard rate, which is nothing but recovered overhead. Then minus actual R into actual rate, which they have named it as standard overhead. Okay, sir. Then coming to capacity variance, there here also they have done something like this. Okay, you have to use the word revised capacity, not only capacity. Revised capacity. Guys, come on, what is the formula? Hello? Huh? What is the formula? For capacity variance, what is the formula? Standard over hours minus revised budgeted hours. Agree na? Into standard rate. Into standard. Now, one second. Now, they have done already here. Standard overhead. How did they get it, sir? Actual hours into standard rate. Actual hours into standard rate. Yes, sir. They have taken this minus what? Where is it? Revised budgeted overhead, which they have done it here, guys. Revised budgeted overhead. How much? 31,200 into 1.5. Guys, what is the formula? First, for capacity, what is the formula? Actual hours minus what hours but budgeted hours into standard. Please be careful. Actual hours should come first. I have already explained the reason for it. Underutilization or overutilization into standard rate per hour. But if calendar variance is computed as then what is the formula for capacity? We have to use the word as revised capacity. What is the formula, sir? Actual hours worked minus revised budgeted hours into standard fixed overhead rate per hour. Okay, sir. Let us take it. This is not. This is actual hours. Okay, na? Yes, sir. Actual hours is how much? 33, right? Minus revised budgeted hours. We have done it here. 31,200. Guys, how do we get it? Budgeted hours divided by budgeted days into actual days. How we got? How much we got? 31,200 into standard fixed overhead rate per hour. 1.5. How much? 2,000? 2,700 favor. Have they got same? Yes, sir. They have done this way. Guys, okay, let me show how they have done. Simple. Actual hours into standard rate. Actual hours into standard rate minus revised budgeted hours into standard rate. And this part, I will use different color. This part, they are done here, you can observe. Revised budgeted hours into standard fixed overhead rate per hour. 46,800. They are taking it. Then the other part is actual hours into standard rate. Actual hours into standard rate. Is that clear? Yes. Sure. Last one. Calendar variance. What is the formula? Actual days minus budgeted days. Please be careful only for capacity and calendar. Actual comes first. I have explained you the reason also. For capacity, it is always good that I have used more than what I have planned because we have overutilized. Sir, what if actually is less than budgeted? That means we have underutilized. Good or bad? Bad. Same way, calendar. If I have worked more than what was planned, good, because I would have given more productivity. Here we are not thinking from cost point of view. We are thinking from productivity point of view, usage point of view. So if actual days work is more than budgeted days, it is always good. So positive variance, favorable. So that is why in these two formulas we are taking actual first and then budgeted. Okay, so 26 minus 25 into standard fixed overhead rate per day, which we already computed, 1,800. So we'll get 1,800 favorable. Check it, guys. 1,800 favorable, 2,700 favorable, 750 adverse, 3,750 favorable. Cross check. Because I want you guys to cross check. If there is any corrections, let us make it. Number wise, you have to take care. Explanation wise, I will take care. That also, if you want, you can take care. If you want to occupy my place. Variable overhead variance. Only three, guys. Variable overhead cost variance. What is the formula? Observed minus actual overhead. Guys, this is nothing but whatever we are variable overhead observed. Sir, have we already calculated? Yes, 65,000 minus 68. Sir, where did you get 65 from? We already done this. Clear? How did we do it, sir? Standard hours for actual output into standard variable overhead rate per hour. Where is standard variable overhead rate per hour? 2 rupees. Next, expenditure variance. Okay, again, some fancy thing they have done. Simple. What is our formula, guys? Expenditure variance. Standard rate per hour minus actual rate per hour into actual hours work. Actual hours work. Okay, sir. Let us go back. Standard rate have they given? Yes, sir. How much is that? 2. Minus actual rate. Actual rate they are not computed. Let us do it. 1 second, 1 second. You guys know now. Better you tell me. I will just put it here. What is the actual variable overhead? Hello. Actual variable overhead. From the question you tell. Huh? Actual variable overhead. 16. Huh? 68. 68,000 divided by actual hours 30. What do you get, guys? Actual variable overhead rate per hour. Correct. Some 2 point something you will get. Keep it like that. Keep it like that. Into actual hours. Into actual hours. Guys, hope you guys are getting it. Efficiency variance. What is the formula? Standard hours for actual output. Standard hours for actual output minus. What are we calculating? Sorry. Efficiency. Standard hours for actual efficiency. Expenditure variance. Slight distraction. Fine, no problem. So, sir, we are calculating variable overhead expenditure variance, which is very similar to labor rate variance. What is the formula? Standard variable overhead rate per hour minus actual variable overhead rate per hour into actual hours work. Actual hours work. What is the standard rate, guys? 2 minus actual rate 68,000 divided by. Yeah, I will repeat again, guys. Technical issue. Sir, what are we calculating? Variable overhead expenditure variance. What is the formula? Standard variable overhead rate per hour minus actual variable overhead rate per hour into actual hours worked. So, what is the standard rate per hour? We already calculated 2. Where is it, sir? Here. Minus actual variable overhead rate per hour. Actual variable overhead divided by actual hours. Okay, as we will get decimal, I am keeping as it is. Into actual hours, 33,000. So how do you do now? 2 into 33,000, 66,000. 66,000 minus 68,000. You will get 2,000 adverse. 2,000 adverse. It is very similar to labor rate variance. Labor rate variance. Labor rate variance. Okay, sir. Next coming to variable overhead efficiency variance. Very similar to labor efficiency variance. What is the formula? Standard hours for actual output minus actual hours work into standard variable overhead rate per hour. Okay, here also they are done like this. Okay, first let us do our normal calculation. Standard hours for actual output, guys, 32,500. Where shall I do? I will just adjust it here only. Okay, now. Okay, now 32,500 minus actual hours is 33,000 into standard rate 2 rupees. How much you will get? 1,000 adverse. 1,000 adverse. Just 1,000 adverse. You can cross check. 1,000 adverse plus 2,000 adverse is equal to 3,000 adverse. Matching the yes. Okay, check also they are done. You can cross check. It is already matching. 9th one done. 10th question. Question number 10. Question number 10, guys. SV Limited has furnished the following data: budget and actual. Budget and actual. Just saw. Budgeted days 25, actual days is 27. All the data is given for July, guys. Then budgeted output or production 20,000. Budget actual output is 22,000. Then budgeted fixed overhead 30,000 and actual fixed overhead is 31,000. Budgeted fixed overhead rate is 1 rupee per hour. In July, the actual hours worked were 31,500. If by chance now if I ask you what is budgeted hours, how much, guys? How much is budgeted hours? 30,000. 30,000. Guys, how is it? Per hour, what is the rate? Hello, 1 rupee. Now, what is the total budgeted fixed overhead? 30,000. How much you will get? 30,000 hours. 30,000 hours, budgeted hours. Hope you guys are getting it. Just stop. What all we are supposed to calculate? Everything is for fixed. Calculate the following variance: expenditure variance, volume variance, total overhead variance. Okay. Total overhead here in the sense from fixed point of view, guys. Everything is from fixed point of view. Oh, shall we move towards the answer now? For fixed overhead variance, what is the actual fixed overhead? 31,000. Budgeted 30. Now, standard fixed overhead for actual production, guys. 30,000 is for 20,000. How much for? 22,000. Clear? Simple, guys. If I do this division, what do I get? Standard fixed overhead rate per unit. If you multiply that with actual output, what do you get? Overhead observed. Overhead observed. This is nothing but overhead observed. Correct? Huh? Any doubt? When you divide budgeted fixed overhead by budgeted output, what do you get? Standard fixed overhead rate per unit. Multiply that with actual output. What do you get? Fixed overhead observed. Okay, this is nothing but fixed overhead observed. Okay. Fixed overhead. Okay, let me do the last one first because that is first in the order. Standard fixed overhead is nothing but observed, guys. Okay, now observed minus actual. Observed is how much? 33 minus the actual 31. 2,000 favorable. Okay, sir. Coming to next expenditure. Budgeted minus actual. Budgeted is 30 minus actual 31. 1,000 adverse. Then volume variance. Again, observed minus budgeted. Observed is how much? 33,000 minus budgeted 30,000. You will get 33,000 favorable. 3,000 favorable. You can cross check, guys. Is it equal to 2,000 favorable? Just so. Clear? Yes. Please be careful. Actually, I did first overhead, fixed overhead cost variance because that is the one which will come first in the order. But here they have asked last. If you do by chance in this order, you may miss the formula also. Clear? Please be careful. However, you have learned, accordingly do it. Okay. By chance, if you are comfortable doing this only first, then maybe you leave space for the first two and do the third one. Clear? And then you come to the first two ones. Oh, 10th one done. 11th one. Very simple, easy question. The following data for PG Limited is given. Budgeted output 400, actual output 360. Budgeted hours, man hours is nothing but labor hours. Okay, 8,000 and actual man hours is 7,000. Budgeted variable overhead 10,000, actual variable overhead 9,150. Calculate relevant variable overhead variances. Okay, sir, we will do it. Only three are there. Only three. Everything is with respect to variable. Correct, no, Ranjita? Sure. Now, can you calculate the rates, guys? Can you calculate the rates? Yes. Now, for example, if I ask you per unit, variable overhead unit, standard variable overhead rate per unit means how much, guys? 10,000 divided by 400. How much? 25. Now, per hour. Budgeted overhead divided by budgeted labor hours. So, 10,000 divided by 8,000. How much, guys? 1.25. What do we call it in the name? Standard variable overhead rate per hour. Clear? Yes, sir. Now, can we calculate actual also, sir? Yes. For example, per hour, if I want to calculate 9,150 divided by 7,000. If I want to calculate per unit, 9150 divided by 360. Per hour is what we require in the calculation. Yes. 11th one. Calculation of standard variable overhead rate per unit, guys. Budgeted variable overhead divided by budgeted output. 25 rupees per unit. Same way per hour. Standard variable overhead rate per hour. Budgeted variable overhead divided by budgeted hours. Man hours. Man hour, labor hour, one and the same. Okay. Calculation of standard variable overhead for actual output, which is nothing but observed. Variable overhead observed. What is it, sir? Actual output into standard variable overhead rate per unit. Sir, can we calculate in hours? Yes, standard hours into standard variable overhead rate per hour. How much is that? Standard hours to calculate, budgeted hours divided by budgeted output into actual output. How much you will get? Standard hours. Sorry? 7,200. How did you get it? I repeat. Budgeted hours by budgeted output into actual output. Into actual output. 7,200. What is the rate per hour, guys? 1.25. How much you get? 8,750. 751, na? Try to match it with whatever we have got here. You have to get the same number. Okay, this is what? Variable overhead. Observe. Variable overhead. Observe. Guys, I repeat. There are two ways to calculate this. How is it? Standard hours per actual output into standard variable overhead rate per hour, or it's standard variable overhead rate per unit into actual output. This is nothing but overhead observed, guys. Or calculation of budgeted variable overhead based on actual hours worked. Standard actual hours worked into standard variable overhead rate per hour. This is not required. Straight away we will do it in the calculation. Calculation of standard hours per actual output. Okay, here they have done 7,200. We did it here, na? Same thing they have done here. Okay, now yes, 7,200 is the standard hours for actual output, guys. Oh, we'll start one by one. Variable overhead cost variance. Standard variable overhead for actual output, which is nothing but observed. We have got 9,000 minus actual, which is given in the question, 9,150. Next, variable overhead expenditure variance. What is the formula, guys? What is the formula? Let us use the formula. Standard variable overhead rate per hour. So standard rate minus actual variable overhead rate per hour. So actual rate into actual hours. So standard rate we have got, how much is that? 1.25 minus actual rate. You do actual overhead divided by actual hours. Do, boys, come on. Boys and girls. Decimal you are getting. Just a minute, I will show you. So many pages. How to filter out, where is it? I will tell you. 9,150 divided by 7,000. 9,150 divided by 7,000. If you get it in decimal, take as it is. Take as it is. 9,150 divided by 7,000, guys. Okay, let me show like that only. 9,150 divided by 7,000 into actual hours. 7,000. See, here easy. Anyway, 7,000 will get cancelled for the second part. First, 1.25 into 7,000. 8,750 minus 9,150. You will get 400 hours. 400 hours. Our regular calculation. Guys. Okay. Next, coming to efficiency. What is the formula? Standard hours for actual output minus actual hours into standard variable overhead rate per hour. So 7,200 minus 7,000 into 1.25. You will get 250 after this. Sorry, favorable. So 7,200 minus 7,000, you will get 200 favorable there. Sorry, positive into 1.25. Yes. Cross check. 250 favorable, 400 adverse. Are you getting 150 adverse? Yes, sir. Net Net is 150 acres. Oh, let us move to question number 12. Question number 12. Only few more questions. Control. 12th one. The following data has been collected from the cost records of a unit for computing the various fixed overhead variances for a period. How much? Number of budgeted working days 25. Budgeted man hours per day. Per day. Hello, 6,000. Output budgeted per man hour in units 1. Fixed overhead cost as budgeted 1,50,000. Actual number of working days 27. Actual man hours per day 6,300. Actual output per man hour in units 0.9. Actual fixed overhead incurred 1,56,000. Calculate fixed overhead variances. Everything they have asked is with respect to fixed overhead. Expenditure volume and cost first. Here also cost is asked at the end. Please be careful. Guys, some basic calculation first. Let me help you out. Budgeted days is how much? 25. Budgeted hours per day, how much guys? 6,000. If I multiply both, how much you will get? Hello? Huh? Tuck. 1 lakh. What is this? Budgeted hours. Budgeted hours. Okay, sir. Output per man hour is 1. That means budgeted output. Hello? Budgeted output. 1,50,000. 1 hour only 1 unit you can produce means. In 1,50,000, how many units you can produce? 1,50,000. So budgeted output is 150. Okay, sir. Budgeted overhead is given for a month only. So straight away take it. Don't multiply with anything. Okay, now per hour how much? 1 rupee. Per unit how much? 1 rupee. Correct? Standard fixed overhead rate per hour or per unit is 1 rupee. 1,50,000 divided by 1,50,000. Okay. Coming to actual number of working days, 27. Per day man hours is 6,300. Multiply. 1 lakh 70. Correct? 1,70,100. Output in 1 hour is 0.9. So what is the actual output, guys? 0.9 into 1,70,100. 1,53,90. Hope you understood. Actual output 153.90. How, sir? What is that total actual hours work? 1,70,100. How did we get it? Per day into number of days. Okay, sir. Now, for producing each unit, how much time we will take? 0.9 hours. So multiply 0.9 with 1,70,100. How much will you produce? 1,53,090. What is this? You should know what you are calculating. Actual output is 153.90 and actual hours worked is 1,70,100. Actual fixed overhead incurred is 156 guys. Okay. Can we calculate per hour? 156 divided by 170, 100. I guess you will get in decimals. You keep it like that only. Okay, chalo guys, we'll move forward. Now standard hours calculation we will do. Okay, standard hours. Standard hours is how much? Guys, 1,50,000 is for how many units? 1,50,000 into what is the actual output? 153.90. What is this? Standard hours for actual output. Okay, sir. Now observed also we will do it so that it is easy. Okay, overhead observed. 153.90 into 1. 153.90, correct? 153.90 standard hours into standard fixed overhead rate per hour. 153.90. Sir, I want to calculate in output. What is the actual output? 153.90. What is the standard fixed overhead rate per unit? 1 rupee. What is the overhead observed? 153.90. Got yes, sir. All things are ready. Observed we calculated. Actual is there. Budgeted is there. Just apply the formula and calculate. Guys. That's all. Actual fixed overhead 1,56,000. Budgeted 1,50,000. Then observe. I have already shown you 1,53,90. 1,53,90. Okay, sir. Now apply the formula and translate the values. First, let me calculate the last one. Fixed overhead cost variance. Observed minus actual. Observed minus actual. Make this as observed. Observed fixed overhead minus actual fixed overhead. Right? See, in a array you may use only the word observed minus actual. Don't do that. Write it full. Observed fixed overhead minus actual fixed overhead. Even for the rates, here are standard fixed overhead rate per hour. Actual fixed overhead rate per hour. Use them in your formulas. Don't be lazy enough to write. You may write simply per hour, standard rate per hour, actual rate per. That is for labor, okay. But here when it comes to variable and fixed, please show whether it is fixed or variable properly. Okay. Observed is 153.90. Actual is 156 guys. So you will get 2910 adverse. Now coming to expenditure. Budgeted minus actual 6000 adverse. Then volume. Observed minus budgeted. Observed minus budgeted guys. This is observed. Okay. Which you will get 3090 favorable. You net adjust this. Are you getting 2910? 2910. Got it up? Yes. So, question number 13. Yeah. Question silence. Question number 13, guys. JK Limited manufactures NXT by mixing three raw materials. For every batch of 100 kg of NXT, 125 kg of raw material are used. Come on. To get the output of 100, you should have how much raw material? 125. That means what's the process loss? 25. What is the process loss? 25. In the month of April, 60 batches were prepared to produce an output of 5600 kg of NXT. Guys, come on. The standard what they are given for is for one batch. What is the actual output? 60 batch. So you have to convert standard for how much? 60. The standard and actual particulars for the month of April are as follows. Okay, mix they have given standard mix 50, 30, 20. Okay, sir. That means whatever 125 is there, you have to divide in this ratio as. Price is given, then actual also mix they have given, price is given, then quantity of raw material purchased is given. Okay. Sir, can we calculate the consumed separately? Yes. How? By using this mix. You are required to calculate price and usage variance. Price and usage variance. Guys, please be careful. Let me explain the data first. To produce 100 kg of output, how much raw material you require? 125 kg. 125 kg. And this data is for every batch. What is the total output, actual output? 60 batches. So we should convert our standard data for what? Actual output of 60 batches. Okay. Question number 13. So answer. Actual material used is how much, guys? 125 into 60. Hello. 125 is per batch into 60 batches. How much? 7,500. Now calculate actual usage. So 7,500 into 60% for A, into 20% for B, into 20% for C, guys. Into the actual rate. Into actual rate. You understood the actual quantity calculation, huh? First calculate what is the total. How did we get total? 125 is per batch into 60. Into 60 batches. Guys, this is raw material usage. Here, just multiply that with the mix what they have given. Okay. Now coming to standard cost. Okay, here they have done standard. First, let us see that. Standard proportion is how much, sir? 50, 30, and 20. So take same 7,500, guys. Here also we have to take same 7,500 because even standard should be for what? Actual output. Divide that 7,500 in 50, 30, 20 ratio. Where is 50, 30, 20 given? In the question. In the question, guys. Yes, sir. See, then they have also done something called as AQ into SR, which is not required. We will anyway do it in the answer itself, guys. That is in the calculation, variance calculation. Let me just show you another way of doing this, guys. Like however we would have done. Just a minute. In the class and all, we will do the table, nah? Like we used to do the table. Let us do it further. Standard for 5600 kg of output. How much is the output, guys? 100 into, one second. Let me go to question number 13, right? Yes. What is the actual output? 5600. Actual output, guys, please be careful. Input was 125 into 60, but actual output what we have got is 5600. Now let us convert all the data for 5600 as per our calculation. As per our calculation, like guys. So, sir, we are used to this. Let us do in this way, sir. I'm just showing you. Guys, come on. 100 kg they have given of output. You can produce through what? 125. Divide it in that ratio. What is the standard mix ratio? Quickly tell me. 50, 20. Divide 125 in this ratio. Quickly. 125 into 50%. 125 into 30%. Sorry? 25. Total is 125. Yeah? Yes, sir. This will give me an output of how much? 100. But actual output is how much? 5600. Agree na? Now, 5, let us convert it. Sir, 62.5 is for 100. How much for 5600? 62.5 divided by 100 into 5600. 3500. Same way. 37.5 is for 100. How much for 5600? 2100. Next. 25 is for 100. How much for 5600? 1400. Correct? Okay. Multiply with the rates, guys. Quickly give me. 21,000 here. 70. 7,000. Total 91, 98. 98. Coming to the actual part, guys. Actual quantity used, do we know? Yes, sir. 125 into 60. 125 is for one batch. How many batches we have produced? 60. So what is the total quantity used, guys? 7,500. Yes, sir. Divide it in actual mix. What is the actual mix, guys? 60, 20, 20. Let me write it in the blue color, okay? 60, 20, 20. 7,500 into 60%. 7,500 into 20%. 1,000. Just a minute. 1,500. 1,500. That means actual loss is how much, sir? 7,500 minus 5,600. 1,900. Actual loss. Actual loss. And please be careful. You would have already always paid or used how much? 7,500, not output 5,600. That is what we have got. But when it comes to material variances, we are always calculating for what type? Raw material, not for output. But raw material should always be for actual. Clear? Yes, sir. Then multiply with the rate. How much you will get? Quickly. 94. 12,000. 9,000. 1,50,500. But this is the best way. Like however we regularly do. They have also done it, but not in the table form. Not in the table form. Did you guys understand this calculation? Yes. Always standard data has to be converted for what? Actual output. What is actual output? 5,600. Oh, fine. Let me go back to their solution. What they are. This part I don't suggest. You can leave it. Coming to the calculation, guys. Where they have done the calculation. Fine. Chalo. They have done like total. They have done. Okay. Alternative they have also done for purchase, guys. That is second option. Now, is it mandatory to be done, sir? No. If you have time, you can do it. But first, let us do the first part, guys. Okay, as per my calculation only, I will go. Listen, listen. For ABC, shall we do it separately, sir? Yes. What have they asked? Shh. Silent. What is the first thing they have asked, guys? Material price variance. What is the formula, sir? Standard price minus actual price into actual quantity. Will you take consumed or purchased? Consumed you take. Consumed we already have it here. Take that. Guys, come on. What is the A? For A calculation is how much? 20 minus 21 into 4,500. Okay, now same way. For B, 10 minus 8 into 1,500. Okay, but let me write it here. Okay, so that we can tally at the end. A, B, C. Just tell me the final answer. For A, how much? 4,500 advance. For B, 3,000 favorable. For C, let me tell you, 5 minus 6 into 1,500. 1,500 adverse. Okay, total please. 3,000 adverse. Okay, let me bring this to the. What is this, guys? Material price variance. Let me now do material usage variance. Come on, one by one. First, 3,500 minus 4,500 into standard price 20. For A, it is 20,000 adverse. For B, 2,100 minus 1,500 into 10. Favorable. Okay, sir. Last one. 1,400 minus 1,500 into 5. 100. 500 adverse. C. Total, please. Sorry. Adverse. 3,000 adverse and 14,500 adverse. Have they got the same thing? Let us check. So much circus they have done, but better go with our regular calculations. Yeah, and guys, see, whenever they have given more than one kind of raw material, please do individual calculation and then show the total. Then show the total. Hope you understood what we did. Clear? So better follow however I showed it, guys. If you want, you can just make a note of it. Whatever I have written in the blue color is the actual part. Please be careful. This is actual mix and this is standard mix. That's why I have differentiated through color. Okay. Let me proceed further, guys. Then they have also done by taking actual material purchased calculation. Instead of consumed, they have used purchased. That is just an alternative solution, guys. Is that clear? That means instead of actual quantity consumed, here what we have taken, guys, actual quantity consumed. Now replace this with purchased. Have they given purchase in the question, sir? Yes. Let me show it. One second. Let us go slow, no problem. I don't want to hurry. Yes, you can see last column. Last column, they have given material purchased. Alternatively, they have used this, guys. Alternatively, the next calculation, second part, instead of actual quantity consumed, they have used actual quantity purchased. Rest all remains same. Prices, everything remains same, guys. 5,000, 2,000 and 1,200. Yes, you can see here. 5,000, 2,000 and 1,200. Yeah, here also you will do individually price and usage and add up the total. Add up the total. Sir, will it affect both price and usage? Yes, in both the formula you will use actual quantity. Now instead of actual quantity consumed, what will you use in both the formula? Actual quantity per. Okay, guys. Now you can tell this alternatively. They have given some note you can see. Material price variance can be calculated at the time of purchase as well. In this case, material variance will be as follows. Clear? That is for price. Guys, I had explained this. I have stressed this in the class. per price. What we pay is for what we purchase. So what is the formula? Standard price minus actual price into actual quantity purchased. But in order to reconcile, even if both are given, purchase as well as consumed, for questions purpose, for academic purpose, what do we use? Consumed. Consumed. Sir, if you have used purchase, what do we get? They are shown. They are shown. Sir, what about usage variance? Guys, what we use is always material consumed. So what is the formula there? Standard quantity for actual output minus actual quantity consumed into standard price. Here, yes. There, sir, should we use purchase or consumed? There it will always be consumed only, guys. Only for price, actually it should be purchased. But just to tally or reconcile our answers, we always use consumed. Okay, sir, instead of doing this, can I just give a note? I may not have so much time now, sir. Can I just give a note telling material price variance can also be calculated by using raw material purchased or actual quantity purchased. If you're running short of time, better give only that note. Yeah. In the calculation, you would have used what? Consumed only. But just to give a note telling price variance can also be calculated by using the actual quantity purchased. Yes. I'm just repeating this again and again so that you guys will not get confused. Sir, in one place they have used purchase, in one place they have used consumed. Sir, what is this, sir? What should we do, sir? Question number 14. We are almost at the end, guys. Come on, focus, stay focused. Following data is extracted from the books of XYZ Limited for the month of January. For the month of January. Estimation. Estimation means what? Standard actual. Standard. Material 800, price don't know, amount obviously we don't know. Material B 600, price is 30, 18,000. Normal loss was expected to be 10% of total input materials. Actuals 480 kg of output produced. Material A 900, price we don't know. Material B quantity we don't know, price we know. That means we have to calculate. Guys, one thing they have given. What is this? 59,825. Actual cost. How do we get actual cost? Actual quantity into actual price. Only for A, na? Only for B, na? Or both? Both. Please be careful. They are not given for A or B. They are given total. So can I tell like this? Actual quantity into actual price for A plus actual quantity and actual price for B. Both put together is 59,825. 59,825. Other information. Material cost variance 3,625 favorable. Material price variance 175 favorable. What is this for you? Clear? Because they have given variance only straight away in the answer. Sorry, question, guys. So what we are supposed to calculate normally is given already in the question. So maybe this would be your starting point. You're required to calculate standard price of material A, actual quantity of material B, actual price of material A, revised standard quantity of A and B, and material mix variance. Material mix variance. Okay, guys. Come to the solution. 14. Material cost variance. What's the formula? They have already given it. How much, sir? 3,625. Okay, guys, what is the formula? What is the cost? And one more thing. Material cost variance. Is it for A or B or both? Both. They didn't mention A or B. That means it is for both. Okay, sir. What is the formula, sir? Standard material cost minus actual material cost. How do you get standard material cost? Standard quantity into standard price. How do you get actual material cost? Actual quantity into actual price. Okay, sir. For both A, B together, yes. So please be careful. 3,625. They have given it. Favorable or adverse? Favorable. That means plus sign. Okay, sir. Guys, standard quantity into standard price for both A and B. We will keep it aside. Actual quantity into actual price. Are they given for both? A plus B. They have given. Yes. Correct. Guys, this is both put together. A plus B. Why, sir? Material cost variance is for A as well as B. Please be careful. So, have they given this? Yes, in the question, the total. I explained that when I was reading the question. Yes, sir. Now standard quantity into standard price. Should we take only for A or B or both? Both. Just stop. Now standard quantity into standard price is equal to what, guys? If I take this to the other side plus the, so 63,450. Hope you understood. Standard quantity into standard price for both A and B put together. How much? 63,450. Now let us break this into two parts. For A separately, B separately. Standard quantity of A into standard price of A plus standard quantity of B plus, sorry, into standard price of B. Did you guys get it? Please be careful. Both we have to break it to A and B. Anyway, this total figure I already had it in the question. Straight away copy down. Okay, sir. Now, what is standard quantity of A, guys? 940 given in the question. Into standard price I don't know. Plus standard quantity of B is given in the question. 705. Observe the question. 705 is given. Standard quantity first. Huh? Kotilva. One second. Okay. If they are not given, we have to convert standard quantity. Just a minute. 14. Yes. So they have given 800 and 600. 10% is the loss. Actual output is 1480. Let us convert it. 1480 is the actual output. Remember that. Have they done anywhere? Let me check. Yeah. Listen, guys. Interesting. This calculation is interesting. Mark a star. Sun or star or moon or whatever you want. Guys, what is the output? 1480. Correct? What is the standard loss? 10%. Divided by 90%. Listen, sir. How did it? Guys, listen. One basic explanation I will do. See, my output is 90. I know that there is a process loss of 10%. So, how much is my output when compared to input? 90%. 90% of whatever I put, I will get as an output. So 90 output is 90% of my input. So what is my total input? 100. Hope you are getting. I repeat. 10% is the process loss means. How much is your output? 90% of your input. 90% of your input. So if you do your actual output is 1480 divided by 90%. How did we get 90%? 100 minus process loss 10%. So what is your total quantity? You will get 1645. Now 1645 is what, guys? The total quantity. Now 800 divided by total, which is already given in the question. 800 plus 600 into 1645. 1645. How much, sir? 940. Same way for B, it is 705. Clear? Guys, listen. Simple. Sir, to produce 1480 units of output, how much should have been my standard quantity? Total standard quantity should be how much? 1645. Now let us divide it between A and B. In what ratio, sir? Standard quantity ratio. We are not calculating revised. Guys, please be careful. They have already given in the question 800 and 600. Is it for actual output? No. So can I tell that as standard quantity ratio? Yes. For how much we don't know. Let us convert now into 1645. 1645. So 1645 divided by total of 800 plus 600 into 800. How many quantities of A we require? 940. And how many quantities of B? 705. Did you guys understand? Got it now? Yeah. Yes. So please, guys, first calculate how much total. This is nothing but total quantity of standard. Of course, total standard quantity. Total standard quantity. You will divide it between A and B in what ratio? Standard quantity given in the question. That means standard quantity given in the question is not for actual output, sir. No. Actual output is how much? 1480. It is 90% of my input. Yes. Divided. Because standard loss is 10%. So you will get what should have been your total input. Divide it in standard quantity ratio wise. Clear? Something new? That is why I just explained in detail. Let us bring it here. 940 and 705. Okay, sir. and standard price of A is not given, whereas standard price of B is given in the question, which is equal to 63,450 guys. Now, 705 into 30, 21,150. This we will keep it as it is. Now let me take to the other side. It becomes minus. So 940 SPA is equal to 42,300. Divide each other now. 42,300 divided by 940. What is the standard price of material A guys? 45. Okay, sir. Next coming to price. Guys, price is also given total. Is it given total? Yes. What is the formula? Standard price minus actual price into actual quantity. Is it only for A or is it for both? Both. That means should we add both? Yes, sir. Guys, what is the formula? Actual. Okay, they have done like this. See, let me just show the formula first. Standard price minus actual price into actual quantity. So what they have done is standard price into actual quantity minus actual price into actual quantity. That is just a translation, guys. That is just a translation. Is it only for A or is it for B or both? Both. Please be careful for both. Guys, now please pay attention. Why they have done like that? Sir, here AP into AQ. Do we already know it for both A and B? Yes, total we know. It is given in the question. 59,825. But do we know this, sir? No. Guys, please be careful. Both are for A and B. Here, sir, actual quantity into actual price for A and B. Is it given in the question? Yes, the total is given in the question. 59,825. Correct? Huh? Yes. Now coming to AQ into SP. Guys, is it only for A or both A and B? Both A and B. Okay, sir. Now, let me take 175 to the other side. Or it's better bring this only because that is minus. Okay? Just yes. 59,000, bring it to the other side, it becomes plus. So it will give you 60,000. So actual quantity into standard price is equal to 60,000. That is for both A and B. Now let us split that into A and B separately. Guys, hope you are understanding. Please be careful. Bit challenging, but interesting question. Hope you understood. How did they got this? You understood first. I have explained here. Our regular formula, they have just translated. Yes, sir. AQ into AP, both put together. Have they given in the question? Yes, sir. Now, AQ and SP is for both put together. Have they given? No. Let us break down and calculate. How much? AQ into SP for A plus AQ into SP for P, guys, which is equal to 60,000. Okay, so now let us translate. AQ, have you got that? 900. Yes, sir. Actual quantity 900. Just a minute. From one day 900. Oh, fine. 900 is given in the question itself into 45. What is this? 45. 45 is what we have got. Standard price of material A. Yes, sir. Standard price of material A. Plus AQ we don't know into actual standard price of material B. Have they given it in the question? Yes, sir. They have given it in the question. 30 is equal to 60. Only one thing we don't know. Can we calculate now? Yes, guys. 900 into 45. 40,500. This we will keep it as AQ for B into 30. That is equal to 60,000. Now let us take this 40,500 to the other side. It becomes minus. So 19,500 divided by 30 will give you 650. Actual quantity of B now is how much? 650 kg. 650 kg. Guys, this kind of question, please practice it once because taking this you may not understand this part. Even here also. Clear, sir? What they have given is total part. That is actual quantity into actual price of both A and B put together. Whereas this now we will split it into A and B separately. We have done it here. Just so. Fine. Now, actual quantity of material B is 650 kg, which just now we derived. Now, third one. Actual quantity into actual price for both put together is how much, guys? 59,825. Let us split now for A and B. Actual quantity into actual price of A plus actual quantity into actual price of B is equal to 59,825. 59,825. Now, actual quantity we have got already 900, which is given in the question itself. Into actual price, do we know of A? No. We will keep it as it is. APA. Then actual quantity of B, we just now calculated. Take it. 650. Into the actual price of B, 32.5. Okay, so 32.5, which is equal to 59,825. Okay, so 650 into 32 is equal to 21,125. Take it to the other side, it becomes minus. So 38,700 divided by 900. You will get AP, that is the actual price of material A, 40. Actual price of material A is 43, guys. Then going to the next one. Total actual quantity is how much, guys? 900 plus 650. 650 we have got here. 900 is given in the question only, na? So total comes to 1550. We have to divide the total actual quantity in what ratio? Standard quantity ratio. What do we get? Revised standard quantity. Okay, so 1550. I am dividing it in whatever standard quantity ratio they have given in the question, guys. Okay, 1550 into 800 divided by 1400. Same way for B into 600 into 600. Guys, please be careful. Here they have considered standard quantity given in the question. Sir, we computed standard quantity. No, sir. Can we take that, sir? Just a minute. We have computed the standard quantity. No, sir. How much, sir? 940 and 705. Can I take this, sir? Yes, you will get same. You will get same. For example, check it. What is the total actual quantity, guys? 1550. So 1550 divided by 1645 into 940 into 940. 885 point something you will get, which is rounded up to 886. Same way. What is the total actual quantity? 1550 divided by total standard quantity 1645 into for B 705. 664 kg. You will get same, guys. What is this? Revised standard quantity. Guys, come on. Wait, what is revised standard quantity? Total actual quantity broken down in standard quantity ratio. Standard quantity we can take anywhere. Ratio will remain same only. Numbers will change. Can I take what is given in the question? Yes. Or else can we take the standard quantity ratio as whatever we have derived? Yes. You will get same. You will get same, guys. Next, material mix variance. The formula is revised standard quantity minus actual quantity into standard price, guys. Okay. So let me write it. Revised standard quantity minus actual quantity into standard price. What they have done is they have converted, guys. RSQ into SP minus AQ into SP. That's all. They have spread it. Okay. Fine. So you can see this is RSQ into SP minus AQ into SP. Guys, this is both put together A plus B na? Yes, sir. Here even this is A plus B na? Yes. Guys, AQ into SP for both A and B. Do we already know? Yes. You can see AQ into SP na? AQ into SP. SP, right? Yes. AQ into SP. Somewhere you would have got AQ. Yeah, you can see. AQ into SP both put together. How much? 60,000. Straight away copy paste. Straight away copy paste. Both put together. Please be careful. Both put together. Both put together. Yes, sir. I have received it. Then this part split it between A and B. RSQ of A into SP of A plus RSQ of B into SP of B. Then RSQ of A we have got 886 into standard price 45 into RSQ of B 664 into standard prices 30. Guys, here whatever we have got into standard prices, that's all. So at the end, how much you will get? 210 afterwards. Sir, this calculation bit confusing for me. Can we do our regular calculation, sir? Yes, let me show it. Let me show it. Yes. Now, for whom is there? A and B, right? Yes. A and B. What is the revised standard quantity? 886. For B, it is 664. Minus actual quantity, guys. 900 and 650. Correct? Into standard price. 45 into 30. Tell. Tuck, 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 tuck. 6 adverse. Answer you got? 210 adverse. Total. Simple calculation. Simple calculation. This is what we regularly do, correct? Yes, sir. Can we compute like this? Yes, sir. Revised standard quantity minus actual quantity into standard price. Do it individually for A and B, add up both. You will get whatever they have derived. 210 items. Is that clear? Just so. Are we done? 14th done. 15th. 14th was a bit lengthy. Parasynthetics uses standard costing system in manufacturing of its product. Star 95 mask. The details are as follows. Direct material 0.50 meter at 60 rupees per meter. Direct labor 1 hour at rupees 20 per hour. Variable overhead 1 hour at rupees 10 per hour. Guys, whatever they have given is per unit. Per unit. Standard data. During the month of August, 10,000 units of Star 95 masks were manufactured. Guys, come on. If I ask you to convert into the standard data for actual output, how much? 0.5 into 10,000, standard quantity. Labor hour, 1 into 10,000, 10,000 hours. Okay, even variable overhead also same. It is observed based on maybe labor hours. Now coming to the actual data. Direct material consumed is 5,700 meters at 58 rupees per meter. Labor hours, question mark, question mark. That is hours also don't know, rate also don't know. 2,24,400. Variable overhead incurred 1,12,200. Sir, question is incomplete. That means grace marks. Correct? Variable overhead efficiency variance is 2,000 adverse. What is this? Int. Int. One of the variants they have given, guys. Variable overhead are based on labor hours. So, variable overheads are observed based on what? Labor hours. You are required to calculate the missing data and all the relevant variances. All the relevant variances. Oh, material variances. Budget is given for 1 unit, guys. 0.5 into what is actual output? You can mention here 10,000 units. 10,000 units. So into 10,000, 5,000. Price is 60. Here you need not do price and amount, not required actually. Okay, because you can save time here. This two columns is not required. Into 60, standard cost 3 lakh. Then actual quantity and actual price is given in the question only, guys. Multiply both, you will get actual cost. Now material cost variance. Standard material cost minus actual material cost. You will get 30,600 adverse. Material price variance. Standard price, which is 60 minus 58 actual price into actual quantity 5,700. 11,400 favorable. Then material usage variance. 5,000 standard quantity minus actual quantity 5,700 into standard price 60. You'll get 42,000 adverse. Check, is it matching? 42,000 adverse, 11,400 favorable, 30,600 adverse. 30,600 adverse. Coming to variable overhead variances. Variable overhead cost variance. Standard variable overhead, which is nothing but observed, minus actual variable overhead. Standard variable overheads, guys. 10,000 into 10 rupees. For each and every unit, it is 10. Correct? Variable overhead they have given. For each and every unit, standard variable overhead is how much? 10 rupees per unit, guys. Which is given in the first table. How many units you have actually produced? 10,000. So how much you would have observed? 1 lakh. minus actual 1,12,500. You will get 12,200 articles. Efficiency variance. Standard hours for actual output minus actual hours into standard rate per hour. So standard hours do we know? 10,000. Yes, no. Labor hour or variable also is observed based on what? Labor hours. 1 hour per 1 unit. Totally for 10,000 hours. Sorry, 10,000 units. How much? 10,000 hours. 10,000 hours. Have they shown it? Yeah, here. You can observe. This is for actual output of 10,000 units, guys. This is for actual output. Okay, sir. Let us come back. Right. So standard hours is 10,000. Actual hours we don't know. Into standard rate 10 rupees. Standard rate per hour is 10 rupees, guys. Okay, so that is equal to 2,000 advance. They have given it in the question. They have given it in the question. Okay, sir. 10,000 into 10, 1 lakh. Minus x into 10, 10x is equal to minus 2,000. Bring minus 2,000 to the other side. Take minus 10x to the opposite side. So 2,000 plus 1 lakh, 1 lakh 2,000 is equal to 10x. So 1 lakh 2,000 divided by 10. You will get actual answer 10,200, guys. Then expenditure variance. What is the formula? Where standard say expenditure. Okay, they have done it in a different way. But what is our formula, guys? Come on. Standard variable overhead rate per hour minus actual variable overhead rate per hour into actual hours. Into actual hours. What is the standard rate, sir? 10 minus actual rate. Actual rate have they given? No. Into actual hours they have given. We just now calculated 10,200. 10,200. Guys, we know that actual rate into actual hours is equal to actual overhead of actual overhead. Clear? That is nothing but actual variable overhead. Have they given? Yes. 1,12,200. 1,12,200. So I am taking this side. 1,12,200. Now coming to this, how much we will get? 10,200 into 10. 10,200 into 10. 1 lakh. So you will get 10,200 articles. Clear? Yes. Guys, simple. We have used this formula, na? Standard rate minus actual rate into actual hours. What they have done is they have converted standard rate into actual hours minus actual hours into actual rate, which we already know. Straight away the amount is taken. Whereas standard rate into actual hours, they have taken this way. 10,200 into 10. 10,200 into 10. Did you guys get it? Yes. Let us move to labor part. Labor standard is 10,000, rate is 20. So standard labor cost is 2 lakh. Coming to actual, 10,200 is actual labor hours into 22. Actual labor cost is 2,24,400. Actual rate 2,24,400 divided by 10,200. Are you getting exactly 22? Yes. It is not given, we computed it. Exactly 22 now? Yes. That means you take it. If not, if you are getting decimal, just keep like this only, in order to avoid the difference, guys. Labor cost variance, guys. Standard labor cost minus actual labor cost. You will get 24,400 articles. Then labor rate variance. Standard rate minus actual rate into actual hours. 10,200. Okay. You will get 20,400 articles. Efficiency variance. What is the formula? Standard hours minus actual hours into standard rate. You will get 4,000 articles. So interest this. Are you getting 24,400 adverbs? Yes, so that means our answer is tan inverse. So we're done with all the 15 questions. Now case scenario. One last question, guys. Simple question. Case scenario. Interesting question. K Limited is the manufacturer of single product A. 8,000 units of product A has been produced in the month of March. What is the actual output? 8,000. At the beginning of the year, a total 1,20,000 units of a product has been planned for the production. Guys, listen here. This is for the year of per month. Year. 1,20,000 is there. for a year. If I ask you per month, 10,000. Because actual data is given for a month. Hello. Planned was 10,000, but we produced how much? 8,000. Okay, for March month. The cost department has provided the following estimates of overheads. Okay, that means standard. Standard or budgeted, you can call it as. Fixed 12 lakh, variable 6 lakh, semi-variable 180. Semi-variable charges are considered to include 60% expenses of fixed and 40% of variable. Let us split it here only. Fixed to variable. 1,80,000 into 60%. Huh? Variable is 72,000. Guys, if I ask you, what is the total budgeted fixed overhead? 12 lakh plus 1 lakh 8,000, 13 lakh 8,000. Correct? 13 lakh 8,000. If I ask you, what is the total budgeted variable overhead? 6 lakh plus 72,000. 6 lakh 72,000. Got it? Because semi we have to split it between fixed and variable. And once I split, you need to forget about semi. Again, don't consider semi. You will become semi. The records of production department shows that the company could have operated for 20 days. Could have operated means budgeted days, actual days. Budgeted days, very good. But there was a festive holiday during the month. Means actual days is how much? 90. Guys, please observe. They have used the word festive holiday, not holidays. That means only one day. Clear? Please consider like that. You may tell, no sir, for me, two festival was there in 1 month, sir, March. Okay, here please go with 1 day. Actually, you are supposed to work for 20 days, budgeted days. Actual days is 90. Because of what? One festive holiday. Okay, let me write it. Budgeted days 20. Actual days 90. Okay, sir. Actual cost data for the month of March 2024 is as follows. Fixed 1,19,000, variable 48, semi-variable 19,200. One more thing, this is for a year. Okay, whatever budgeted is there, that is for year. Please be careful. Now, for a month of March is how much? Fixed 1,19,000, variable 48, semi-variable 19,200. Here also should we split, sir? Yes, fixed to variable. 19,200 into 60%. Quickly do it, Inchara. By 20. Minus 19,200 you do. 7,680. Now, if I add up to the respective cost tax, 11,520 plus 1,19,000, 1,30,520. Coming to variable, 48 plus 7,650, 55, 680. 55, 680. Guys, this is per month. What is given budgeted is for year. Please be careful. Okay, let me write that also. Illa andre ella admele per month. The cost department of a company is now preparing a cost variance report for managerial information and action. You being an accounts officer, come on, take it in charge of the company are asked to calculate the following information for preparation of variance report. What is the amount of variable overhead? Cost variance for the month. Okay. Next, what is the amount of fixed overhead volume variance for the month? What is the amount of fixed overhead expenditure variance for the month? What is the amount of fixed overhead calendar variance for the month? What is the amount of fixed overhead cost variance for the month? This is the first item actually. Okay. For fixed overhead. Fine guys. They have asked totally 5 requirements. Let us do it one by one. Last part. Yeah, answer to case scenario. Let us straight away go to working now. Fixed overhead. Standard fixed overhead rate per unit, how much guys? 12 lakh divided by 1,20,000. 12 lakh divided by 1,20,000, which comes to 10 rupees. Fixed overhead element in semi-variable comes to 1,08,000. How much, sir? 1,80,000 into 60%. Into 60%, which comes to 1,08,000. Then fixed overheads, budgeted fixed overhead divided by budgeted output. How much, sir? 1,08,000. For this we are computing now. Divided by 1,20,000. 0.9. Sir, can I straight away do both, sir? Yes, they have done. They have done individually and added up, which comes to 10.9. Or else, we already calculated total of how much, sir? 12 lakh plus 1 lakh 8. How much you will get? 13 lakh 8,000. Can I straight away divide it by 120? Yes, you will get 10.9. You will get 10.9. What is this? Divya, what is this? 10.9. What is this? Variable. Thank you, thank you. Standard fixed overhead rate per unit. Per unit, guys. Considering both fixed element purely and in semi-variable, what is the fixed component? Clear? Yes, sir. Let us move towards fixed overhead observed, guys. What is the actual output? 8,000. And what is the fixed overhead rate per unit? 10.90. Observed, we got 87,200. Okay. Budgeted variable overhead 6 lakh plus variable portion in semi variable 72. Total is how much? 672. Guys, I already explained all this. Then per unit how much, sir? 6,72,000 divided by budgeted output. Budgeted output is this is total. That means same. It would be 1,20,000. 6,72,000 divided by 120. 5.6. Guys, please be careful. Amount also we have taken per annum. Output also we have taken per annum. Sir, can I convert it into per month and take? Yes, same answer you will get. Don't worry. Because numerator as well as denominator both are per annum. Will it change our answer? No, it will be same. Next, budgeted annual fixed overheads. 12 lakh plus 60% of 1 lakh 80, which comes to 13 lakh 8,000. Nice. 13 lakh 8,000. You would have done here only. Again, they have done later. Okay, that is 12 lakh plus 1 lakh 8,000, guys. Oh, possible fixed overhead. Possible fixed overhead. Sure. Budgeted fixed overhead by budgeted days into actual days. This is anyway not required. I don't suggest it because we'll straight away do it in the variance calculation. Actual fixed overhead is how much? 1 lakh 19 per month. Please be careful. This is per month. 1 lakh 19,000 plus 60% of 19,200. 1 lakh 35,20. Actual variable overhead 55 680. Guys, I already explained all this. We already learned all this while seeing the question itself. Oh, now let us come to the variance calculation, guys. Variable overhead cost variance. Overhead observed minus actual. Actual we just now did per month 55,680. Standard variable overhead observed is how much, guys? 5.60 per unit into 8,000 units. We have calculated standard variable overhead rate per unit into what is the actual output in a month? 8,000. So this is overhead absorbed for a month or year? Month. Please be careful. Month. Okay. 44,800. Yes, so 44,800 minus 55,680. Guys, this is actual variable overhead per month. 10,880 afterwards. Next, fixed overhead. First, let us calculate cost. Where is cost? Yeah, this part. Cost variance. Observed fixed overhead minus actual fixed overhead. Observed fixed overhead 87,200. How did we get it? Here. Standard fixed overhead rate per unit how much, guys? 10.90 into output per month 8,000. How much we have observed? 87,200. Guys, please be careful. Don't get confused while calculating 10.90. We have taken numerator as well as denominator both per annum. So not a problem. Not a problem. Sir, can I convert both into per month and then do it? You'll get same. You'll get same. For example, budgeted fixed overhead divided by 12. Budgeted output divided by 12. Now divide each other. You'll get same. You'll get same, guys. Okay. Observed 87,200. Actual 1,30,520. 1,30,520, guys. Yeah. Per month. Oh, you'll get 43,320 afterwards. Then let us come back to expenditure. Okay. After cost, we'll go to expenditure. We'll follow the order so that it would be easy for you. Budgeted minus actual. Budgeted is how much? Budgeted fixed overhead 10.9 into budgeted output 10,000. Sir, how did you get it, guys? In a year, what is the target? 1,20,000. Per month, how much? Divided by 12. What is the budgeted output per month? 10,000. Hope you guys are getting it. Budgeted output for a year is 1,20,000. Initial part of the question. So per month, how much? Divided by 12. 10,000. For each and every unit, what is the absorption rate? 10.9. Multiply both. What do you get? Budgeted fixed overhead. Budgeted fixed overhead. Or else you can do in this way also. Guys, listen here. Just a minute. I will show you. Yeah, just a minute. Budgeted fixed overhead, right? Yes. How much is the total? 13 lakh 8,000. Is it per annum or per month? Per divided by 12. 1 lakh 9,000. Hope you guys are getting it. 13 lakh 8,000. How we got? We already understood. 12 plus 1.8. Clear? That is per annum. Divided by 12. That would be what? Fixed budgeted overhead per month. How much you got? 1 lakh? 1 lakh 9,000. Oh, let us go back to the answer. 1 lakh 9,000. How much do you get here? 1 lakh 9,000. Either way you can do, guys. You will get same. Minus actual overheads. 1 lakh 30,520. You will get 21,520 advance. Now let us go back to volume. Observed minus budgeted, which we already know both, guys. Just deduct each other. You'll get 21,800 adverse. Just check it. 21,800 adverse plus expenditure is 21,520 adverse. Are you getting 43,320 adverse? 43,320 adverse. One last thing, guys. Calendar. Budgeted days. Hello, budgeted days. They have done some calculation. We will go with our calculation. What is the formula? Actual days minus budgeted days into standard fixed overhead rate per day. I will do here. Actual days, guys. 19. One festival day. 19 minus budgeted 20 into rate per day. Budgeted overhead is how much? Here we got now 1,09,000. 1,09,000. This is for how many days? 20 days per day. Per day, how much? So 1 into how much is that? Quickly, 5450. So you will get 5450 address because you work 1 day less. You have worked 1 day less as per the plan. Guys, did you get it? Yes. So they have done some possible and all. Possible and all are not required. Where is that calculation? This calculation. Sir, what is it? Budgeted fixed storage is for budgeted days. How much for actual days, guys? Yeah, but use our regular formula. Use our regular formula. Yes, 5,450 afterwards. Yes, finally we are done with discussing ICI questions.